So you'll hear a lot about the Fed, low interest rates, monetary policy, and maybe you're wondering, how does that affect day trading? There's a couple things I do want to go over, and we'll talk about that next. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to like this video, share with your friends, and also ring that bell as well as subscribe to the channel. Now, I want you to ring the bell so you get notified when we go live. A lot of the times, if there's an announcement in the markets, say there's a Fed rate change, we're going to talk about that. You want to jump on live and know what's going to happen. We do that on YouTube Live, and then every Monday night, I also go live and break down the charts. So hit that bell and be notified as soon as we go live. All right, so many of you, especially if you're used to the world of what I like to call quote unquote real finance, where you're talking about real stocks like the Microsofts and the Apples, and maybe you're looking at refinancing your house or buying a car, and you hear about the Fed, and it happens a lot. Even the current government, the president talks about the Fed a lot. So you might be wondering, why do I care? How does that apply particularly to trading? And I've got maybe a unique approach, but my approach is particularly focused on momentum trading and low price stocks. And again, if you're used to the traditional world of finance, you might be like, wait, how does Fed monetary policy, low interest rates, how does that transfer to trading a pump and dump or a stock that's gone from 10 cents to $10 in one day or multiple days? I think it applies in more ways than you would think, okay? Simple fact is, and this is not against anybody anywhere out there in YouTube land, but the simple fact is most low price stock traders, most people that are trading these penny stocks don't have a lot of money. That's why they're looking at these low price stocks. They're trying to double their account, triple their account in a short amount of time. That means they're cash strapped. What happens when there's low interest rates? You can borrow more money. You can finance that car, you can finance the TV, and you can put your cash to work in a market. Great thing, in my opinion. I think that I talk about this in so many videos. I think that if you're looking to make a little side money, supplement your income, pay down debt, I think trading is one of the best ways to do that. You got to have rules, you got to have a trade plan, you got to watch all these videos in the channel, but if you're diligent and disciplined, you can really supplement your income. And that's the great thing about low interest rates. Simple fact is, if you've got to, borrow that money to pay for medical bills or to pay for the kid's school or whatever, at least if you're paying a lower interest rate, it gives you more what we call disposable income. I say don't dispose of that income. Put it in your trading account, put it in your knowledge account, and try and grow it over time. So that's one of the reasons I think that we see these huge moves in the stock market these days is, I remember when I'm a child of the 70s and 80s. I remember those days when 15% interest rates, 20% interest rates. I mean, if you were buying a house back then, it was everything you could do just to make your house payment. It's a double-edged sword. We saw that in 2007, 2008. Free lending may or may not be a good thing, but if you're smart about it, and that's hopefully why you're on this channel, and you're borrowing money for the right reasons, the lower the interest rate, the better for you, the more money it gives you to speculate. Now, how does that translate into trading opportunities? Remember, what we're doing in this niche, we want more buyers. We want more mania. We want more money flowing into the markets. And remember, I'm not making a judgment on monetary policy. So whether or not you think, the free-flowing monetary policy we have is the right thing or the wrong thing, it is what it is. Nothing I say, nothing you say is going to change the the World Bank's perspective or the Treasury Department's perspective or the Fed's perspective. You can only react to these things. And the way I look at the more money that are in trading accounts, especially in momentum traders accounts, that's more buyers, that's more potential that we get all-day moves and multi-day moves. That's what we look for in momentum stocks. If we can find that big stock with a story, with volume, and with news that everybody can latch into, the more buyers we have, the more money we have is in the greater pool of day trading money, the more likely that stock's going to hold up, more likely it's going to spike the next day, which is a pattern day trader friendly rule. So it's kind of an interesting approach that I take. I'm always looking to how can this help my trading. I think back to if you watch the Steady Trade podcast, which I hope you do, you can go to the YouTube search bar and type in Steady Trade. It's a great podcast where we're really geared towards a lot of these beginning and intermediate topics. I think back to one of my favorite episodes with Jack Kellogg, young guy that really worked his butt off as a car valet to build up his trading account and then execute those trades. And I think back all the time, one of the biggest takeaways from that podcast was Jack's mantra was, how is this helping my trading? How is this making me a better trader? I joke a lot on these videos. Watching the Kardashians isn't helping your trading. Watching football, watching baseball, watching the NBA isn't helping your trading. But if you can think about things like a trader, looking for ideas, looking for the fact that if you're wondering, hey, why do these stocks make so many big moves? How does that relate to low interest rates? Those are the connections I'm always trying to make. And just like you're trying to connect neurons in your brain, I think some of the best trading ideas can come from connecting all those dots. I mentioned it a couple minutes ago. What do you think? Is this free money world we live in with, one digit 2 or 1%, 2% rates, do you think it's a good thing or a bad thing? Let me know below. I think someday the chickens might come home to roost, as they say, but in the short term, take advantage of it. Always lower your bills as much as possible, carry as little debt as possible, but at the same time, if you're smart, borrowing at a low interest rate isn't necessarily a bad thing, especially if it will help you put aside a little bit of money to learn trading and grow your account. Thanks a lot, everyone.